Wow, the Queen Creek market is definitely heating up with sales increasing over 36% from last month in Queen Creek, Arizona. Today, I've got the mortgage and real estate market update for Queen Creek, Arizona, covering the entire Southeast Valley. But today, our focus is on Queen Creek. So let's jump in and talk about what's going on. Queen Creek is currently experiencing a balanced market, but each of these individual metrics gives us a close view of what's going on in each of these areas and why Queen Creek is currently experiencing a balanced market. For each metric, I look at it from either it's a hot metric, a cool metric, or a balanced metric. So let's look at months of inventory. Currently, months of inventory is sitting at 3.6 months, definitely on the higher side of a hot market, but still very hot. 98 days on market indicates that Queen Creek is kind of cool from that perspective. But sales per month, sitting at 266, although still a little on the cool side, is heating up and heating up fast. We'll talk about that here in just a moment. Currently, median sales price in Queen Creek is $428,000 with a sold to list ratio of 98% and seller paid closing costs. 66% of sellers last month provided seller paid closing costs in the amount close on averaging about $10,400. Now, mortgage rates are up 0.5%, so let's take a look at all of this and see how the market is moving and what this means to you. Now, all of the real estate data is provided by Kristi Kenney with K2 Homes, ProSmart Realty. I focus on the mortgage side, but the reason I look at these real estate metrics is because the better in tune I am with what's going on in the real estate market, the better I can provide unique and personalized mortgage solutions to capitalize on the benefits available to you. So, let's talk about, first of all, months of inventory. A balanced market is considered 4 to 6 months. So we're very close to that, sitting at 3.6 months of inventory. But look at this. We saw a sharp decline in the months of inventory from last month at 5.2. We're down 1.6 months of inventory, definitely heating up. And we can see that in other areas as well, such as the sales per month. As I mentioned, we're up 71 sales from last month, from 195 to 266. So things are definitely heating up. Now, this metric is a little bit interesting. Days on market are continuing to increase, sitting at 98.5% days, or not percent, 98.5 days on market, up 14, almost 15 days from last month and 66 from a year ago. Now, I'm expecting that this is going to top out here and start to decline, especially as we see sales increase and the inventory drop. I think that there's just going to be more competitive nature out there, which is going to lead to shorter time frames for homes to be on the market. Now, median home prices have dipped. We're down $32,500 from last month, over $47,000 from a year ago. But again, as buyer demand returns, as homes on the market decrease and sales pick up, I fully expect that the median home price is going to start heading back up here as well. Now, here is a metric that is a kind of an interesting thing to look at in terms of how willing sellers are to negotiate. And as you can see here, we're sitting at 98% sold to list ratio. That means that sellers are selling the home for 98% of what they listed the home for. Now, this is up from the month before, up 0.6%. But you see we've kind of leveled out here. And so this is why I say that this is a balanced market right now in terms of the sold to list ratio. I think that things are going to start increasing. As buyer demand returns, we're definitely going to start seeing these increase, which means sellers are going to be less willing to negotiate because they've got the power with less homes on the market and more buyer demand. And that's what we can see here is seller paid closing costs. They were definitely willing to negotiate here over the last few months. But again, with sales picking up, I expect that this is going to drop. 66% of sellers provided seller concessions. That's pretty darn amazing, especially considering where we were about a year ago, sitting around the teens, maybe low 20s, sitting at 66%. That's pretty significant. $10,400 was the median amount of seller paid closing costs. And so we can see we are up in basically all of these metrics over the last month and over the last year. So again, as sales pick up, we're going to start seeing that start to drop. So how do you take advantage of this as a potential home buyer, considering the Queen Creek, Arizona area as a place to buy a home? Well, mortgage rates are up. Now, that is causing buyer demand to be low, which is why we don't see a lot of buyers out there in the market. They just don't feel that it's affordable right now. And so they're kind of sitting on the sidelines waiting for rates to drop. And when they do, The problem that we're going to face is that all the buyers are going to kind of flood the market at the same time to take advantage of those lower rates. When we saw this dip down here in mortgage rates and down here again, we saw that buyer activity pick up. So how do you take this information and utilize it to benefit you? Well, the best way to do that is through our certainty guarantee, something we're offering to our clients, which allows you to take advantage of the market now. While sellers are willing to negotiate with seller-paid closing costs, reduce sales prices, but before interest rates drop. And our certainty guarantee will allow you to refinance at no cost within 2 years after closing. We fully expect that rates are going to drop because rates are closely tied to inflation. As I'm sure you've heard, the Fed is doing everything they can to reduce inflation by increasing the prime rate. But the prime rate is not mortgage rates. Prime rates are short-term rates. Mortgage rates are long-term rates. As the prime rate goes up and makes buying things more expensive, inflation will drop. We've already started to see that. And as it continues to drop, mortgage rates will follow right along with inflation, seeing lower rates. I expect that by the summer, we'll definitely see much lower rates right around the same time that buyer demand is going to pick up. So that's what's going on in the market, and that is where your opportunity lies. Enter the market before buyer demand returns. Use our certainty guarantee to refinance for free once rates drop. If you have any other questions about the Southeast Valley, we do market updates in Chandler, Gilbert, Mesa, Tempe, Queen Creek, and each individual zip code if you'd like to see that data because you either own a home or are considering a home sale or purchase. Let us know. We'd be happy to provide that information. And if you're looking to buy, sell, or refinance, then let's meet in person. Talk about your unique scenario and how you can capitalize on the market.